Shares of Cisco, by far the biggest decliner in the Dow today. They fell 2.5% after yesterday's disappointing profit report and 2014 forecast. That's got some industry watchers questioning Cisco's turnaround plans. Our Josh Lipton has more.
We will look at it not just from a growth perspective.
It was a tough quarter for Cisco's CEO, John Chambers. The company suffered a nearly 8% drop in sales, and only 3 of its 9 business segments showed growth. Cisco didn't give investors much reason to cheer, predicting that revenue would decline again in the current quarter. Cisco is seen as a tech bellwether. The company makes equipment that directs data traffic across the internet. Analysts covering Cisco say a number of factors contributed to Cisco's disappointing financial results. There are some challenges out of Cisco's control, such as a weak global IT spending environment, which is plodding along in the low single digits. On the conference call with analysts, Chambers talked about the weakness he's seen specifically in the emerging markets, such as Brazil, Russia, India, and China. But there are also issues specific for Cisco. The company has overhauled key products in its core businesses of switching and routing. Customers have been stepping back and evaluating whether they want to buy these new products. Investors sold Cisco shares today, discouraged by the results, but bulls say the stock is cheap and they're optimistic that Cisco will ultimately get some traction with its new products.
Cisco has the best arsenal in terms of the product portfolio. They have the best experience in terms of navigating prior market transitions, and they have the most flexibility when it comes to the balance sheet.
There are also questions about Chambers, a source of tension among Cisco investors. His fans say he's grown the company from $2 billion in annual revenue to more than $48 billion since Chambers became CEO in January 1995. That stock is up 1,000%, more than the major indexes. But in the past 10 years, the stock is down nearly 10%, way underperforming the market. Chambers has indicated that he could step down as CEO as soon as this year. Posse thinks a transition in the C-suite within that time frame would make sense for the company.
He's got a long, credible history with the company. I think he's indicated it's probably time for him in the next couple of years to hand over the reins, and I'm comfortable with that sort of a time frame.
Chambers and his team have a clear plan for Cisco, stay very active when it comes to M&A, invest a lot in research and development, and keep buying back stock from shareholders. Time will tell if that's enough to win over investors. Josh Lipton, Nightly Business Report, Silicon Valley.